Okay, good afternoon, guys. Let's get started. Welcome to another live trading clinic. My name is Steve Ruffley. You should know that by now. What we're going to talk about today is really, again, we're going to focus on the Bank of England minute. Probably going to be not a non-event because it's all about really understanding that the market is priced in that there's going to be no change in rates today. That's fine. But it's all about what we're going to talk about, the rhetoric, what comments can come through. So what we'll do is go through the markets. We'll go through what could potentially happen. And again, any questions you've got, guys, just let me know. Again, these are always open sessions. So before I start, I need to read the risk warning. That spread betting, safety trading both carry high level risk or capital. Sorting losses that exceed your initial deposit. It might be suitable for everyone, so please ensure you fully understand the risks involved. Now, the information codes provided here under no circumstances considered an offer solicitation to invest. Nothing here should be issued as investment advice. Again, educational only. Content of the webinar is posted by the moderator at 9trade.com. Intrader does not accept any liability for consequences during this section. Okay, so what we're going to cover. We're going to do live charting analysis. So that really consists of multiple time frame trading. Again, just looking at different time frames on one chart. Fundamental analysis, which again, there's plenty of that at the minute with the debt ceiling and what's happening in the world. Live real money trades. If you see anything good, we'll put some trades on. And question and answers, guys. Again, this is down to you. Anything you want to ask me, anything you want to get involved in. Trish is asking, is it a webinar for Forex trading? Well, we can talk about Forex. We can talk about the indices, talk about anything you like. And that's the whole point of these sessions, is to get involved and to share ideas. So we're going to see the markets right now. It's a bit of a snapshot of what's happening. So just got gold up. I've got a DAX, the S&P. So you can see in the S&P, again, it seems to be on a nice bull run. We're trading outside the Bollinger Bands right now. But, coming towards the top, I guess, on the RSI and certainly on the D-Mark, looking for a bear reversal at some point. Gold, the kind of opposite, as you'd expect. Gold's been a bit funny, though, really. It's been kind of following the stocks, which is a little bit unusual. It's been going up when, the stocks have been going up, so that's been catching people out. DAX, as always, again, very, very directional. It starts to go. It's a very kind of powerful move yesterday where, again, a lot of people were short, expecting a breakdown to these lower levels. Market bought back up and again then continued to rally. So, interesting to see. I mean, what we'll look at really is something a bit more UK based because we're going to do UK data at 12 o'clock. And we see the FTSE's following the same pattern as the S&P and the DAX. We're seeing some levels here being hit. So we've got, again, some kind of the Fibonacci's that I do, basically based upon what's happened in the past and what can predict the future. So we're trading right now with 161.8 overextension just here. So I'm anticipating that could be obviously a big break of bounce points. I mean, for me, I believe that will be near the top of trading right now with 77.9 ticks up, 294 in the Nasdaq, S&P's up 168. So trading for me right near the top. So I'll be looking for some sort of reversal around here and come back maybe to 50%. Or some sort of parity. Again, looking for a bear reversal, trading at 55.89 on the D-Mark, which is, again, you can see not really kind of ready for a full reversal yet, but certainly indicating the market could, has peaked to some extent. And again, you can just see how the market moves. I mean, it's always good to have these indicators up. RSI, is a great one. When we're trading above 70, you can see the market then starts to come down, okay, from here to here. You see the same, again, high on the RSI, high on the D-Mark, market sells off. So again, you look for these high points here. The gap obviously comes in and helps it down. But again, it's a similar situation, and we're quite high here. So maybe the market has got room to rally slightly further. But you're expecting the market, to come down. So really, what will it mean in the data today? Well, it's not really about if we're going to change interest rates. That's, I think all the analysts have gone for 0.5 unchanged. But it's all the other things we're trying to understand and trying to kind of put a handle on. Mark Carney, again, from Canada, the first non-English person to hold the post in hundreds of years. I thought he was going to come in and be a little bit more aggressive, a little bit more sweeping, and come across and really hit inflation. One of the first speeches he had, he mentioned inflation. I thought, good, we've got somebody who's going to tackle inflation, because that's the real thing that's hurting us right now. Is inflation. The pound in your pocket's worth less, so the average man on the street doesn't have enough money or has less money to be able to go and spend on basic necessities. Wage prices are not keeping in tune with inflation, so you're not getting as much money as it was in real terms this time 1, 2, 3 years ago. So really, what we're trying to do for the average people, the rich people seem to be getting richer, and the poor people and middle, kind of classes as we call them, are getting even further squeezed. And with petrol going up, with household goods going up, food going up, it's very difficult to maintain that balance. Now, inflation was meant to be 2%. We've been way above 2% for years now. Getting towards the tops of where we are at 2.7. Now, we're linking inflation to unemployment. That's just a stalling tactic. Let's face it, that's just a stalling tactic. That doesn't really mean anything. We've tried to keep interest rates low so we can stimulate growth. Not happened. All we've done is to recapitalise the banks, made them promise to lend to small businesses and growth. Not going to happen, is it? It hasn't happened. So why do we keep interest rates low? Well, not to stimulate growth, but to allow people that have overextended on debt to pay them back. So that's all I see. My kind of latest idea is, instead of trying to come after Google and, etc. and Apple, stop chasing them for tax. Make them pay 5-10% of the profits back to employees in bonuses. Get them spending. Stimulate the economy that way. Make the money, the people work hard within companies and, go in, do a good job. And if the company does well, they get more of a bonus. They'll go out and spend it. That for me is a better way than try and, hunt people and get these tax levies, etc., etc. It just doesn't seem right to me. So someone's just asking now, John's just asking, is it a good idea to buy the pound now, Steve? Well, I mean, you can take a speculative view that maybe now would be a good time to buy the pound before the announcement. Again, if there's a cut in interest rates or an increase in interest rates, and certainly that would move the markets. However, it's all about the rhetoric, isn't it? It's all about what's happening, right now within the markets and what the underlying things is. Mark Carney's not going to come out and say, yes, I'm going to cut interest rates tomorrow, or this, that, and the other. Mark Carney's going to say things to steady the economy. So it's almost like being a detective. You have to work out what these people say. And John Claude Trichet, for me, from the ECB, was a master at this. Mark Carney, not so good. Mario Draghi, terrible. Ben Bernanke, a past master. So it's understanding what, is to be said. I mean, if you're looking to buy the pound or sell the pound, John, I mean, if you're looking to buy, then here we have the pound against the US dollar here. So really, what's happened is we've reached good support down here. Good, very, very solid, 1, 2, 3, 4, 5, 6 attempts to break lower, and we haven't. So yes, you've got to look at your upside targets. For me, the low end of where we've been trading on the fib now becomes a support resistance issue. So if you're going to stay long, I'd stay long to 1.59745. Okay, that looks like a good trade to me. You look for a Bollinger Band test on the upside, and we haven't broke the lower Bollinger Band. We found good straight line support. So yeah, for me, a long seems like a good idea. Again, if you look at the bear reversal, gone as low as we can down here, and look, the market is trying to rally but couldn't. And realistically, we're looking for a bounce and to be heading to the 70s. So quite a long way for the reversal to now go into action. We've bounced off the oversold, okay, on the RSI. Another good key indicator. So the moving average, the midpoint, is our target. And, to get overbought, again, we've still got 25, 26 points. So for me, yeah, absolutely. If you're long the pound against the dollar, that seems, in the short term, a fairly reasonable trade. Well, there we go. Some words from Trish. She's going to keep her long position as well. Well, like I said, I mean, it isn't, for me to give you financial advice. I just go through the basic technicals. And I'm a technical trader and a fundamental trader, but I can only tell you, what the charts are telling me. We've tried to break lower a number of times, haven't we? And we haven't gone low. So what we're trying to do now is retest them highs. So the levels are 1.59, 160, maybe as high as 1608. But again, you've got this big down move, so do a Fibonacci. Keep it simple. From the highs to the lows, you're 50% here. So 1.60221 for me looks to be what the market wants to get back to. So upside room and target, you've got another 76 ticks. So if you can take 20, 30 ticks of a long side position out of that, you're doing all right. So that's how I look at my charts, and that's how I bring it all together. So it looks easy, doesn't it? Sometimes when you lay out your charts in the right way. Now, again, you see on Facebook and you see in other kind of forums that people have got 10 screens, they've got Ichimoku clouds. You don't need to make your charts too complicated. There's no point in overcomplicating and looking at things that you don't really want to focus on. So for me, keep it simple. RSI and DMARC indicator is something I've used fairly recently in my career, to be honest. But generally it was just RSI, and it was maybe tied in with the fibs, maybe targeting the moving average. So, Drew's just asking, what is the indicator below RSI? Well, that's a demarcation indicator. It's just a standard MT4 indicator, and that really just acts as overbought and oversold, but it's more of a smooth line curve. So for me, again, it just shows you the overbought and oversold territories, and I just named the lines as what I want to call them. So this would be overbought and oversold. So I just say you in the hourly charts, when we hit these points, you're looking for the market to have been overbought or oversold and reverse its current trend. So that's all it is. But it's very similar to the RSI. It's just a little bit more smoothed on the curve and just takes into account just a little bit of more kind of, but yeah, it just takes into account more of a smooth curve. And again, you can just Google these things and read them. But for me, they're just very much like the overbought and oversold territory. So got 5 minutes or so before the announcement's made. Again, you can see the FTSE has not quite reached 6384 spot 6, and it's started to come down from that point. So again, you might want to start to look at taking a short position, or again, see what happens. But if we start to close below these levels, then definitely 636 spot 8 will be a target, and to get back into them Bollinger Bands. I mean, all you have to do is look back what happened in the past. When we touch these Bollinger Bands, the market comes down, we'll break outside of them. So really, this should be no different scenario. But we've got the fundamentals, we've got the difficulties of, will we, won't we raise the debt ceiling. Everyone knows that the US is not going to, they're so aggressive, aren't they, the US, going out into other countries and protecting the free, open market way of, existing. Why are they going to literally stop the financial world in its tracks by defaulting on its debt, by its own admissions? Ridiculous. It's never going to happen. So that's probably why when we hit all the low points in the stocks, they start to rally, because people think, come on guys, this is the USA. They're not going to really cripple themselves just so Bonner can, John Bonner can make a point. This guy, once this is all over, he's finished. He's going to be gunned for in a big way. Obama, I think, is doing the right thing by holding firm, but we'll have to see. The only people it's hurting right now, are the US, and the world market is kind of taking a step back. But you have to think about how much US debt and dollars are held over the world. Nobody's happy about this. Nobody wants to see this game being played out in public. So, interesting. Yes, absolutely, Sam. Tom D. Mark indicator, because the guy was called Tom. So, like I said, it's one that I've been using fairly recently. I had some good success with it. I like to try and find the extremes of the market. So all my charts do the same things: extreme on RSI, extreme on the D Mark, and extremes on the Bollinger Bands. So once you can find that target with straight line levels, then you're just looking to to sell, or buy back into the midpoint, or kind of the moving average. So, if you look on the FTSE, we look at a longer term trade, you've got, 50 ticks to come back to the moving average, take the lower band, another 40. So you've got, a point movement. So you have to see, again, it depends. We've gone from the moving average to the Bollinger Band, so we've moved 60 ticks, realistically, how far can it go today? Can it hit these tops up here? Can it go 100 ticks? I don't think so. So I think hopefully we're going to, because I took a short position around here. Hopefully the market's going to find this, 637 is a good, kind of top in the market, then move back down. So I'm not looking for a massive trade, but, maybe realistically start to test back here 20 ticks, or come back down to, just the lower the bowls and, 6346. So 30, 40 tick move, nothing to write home about, but we'll have to see. Or what do the little green red arrows with the current candle denote? Well, these are pivot points. These are pivot points based upon volume and the current candle. Okay, so this candle, this is how far realistically up and down that candle can move. So again, just basic, simple programming that I've had done just helps me look what's happened in the bigger picture, with having the fibs and the weekly, monthly, and daily points of interest, like these up here, and then having the short term, what can happen, and then my big time indicators. So that's just how I trade, the old time frame trading method. All right, listen, guys, I've whittled on now for 15 minutes. We've got the announcement coming through, so I'll give you the announcement, and then we'll chat through the rhetoric. So I'll just say I've commented the bullish or bearish. Okay? All UK based, remember. 30 seconds, okay, guys? So again, we're going to be looking for any kind of rhetoric any kind of comments that are going to affect the FTSE or the pound against the dollar here. Okay, dollar's taking a bit of a spike. Ten seconds, guys. Unchanged, okay? So, as we expected, unchanged. But look at the pound now taking a spike, okay? The pound's taking a real spike on that, trying to get higher. So listen for comments now, guys. So if you're long the pound, okay, stay long. You got your targets here, 1.5974. Okay, just listen for any comments to come out, from Carney, just in case anything else is said. Okay, guys. So not looking like anything's particularly being said right now. But again, look, you've got your pivot here in the pound against the dollar. So again, if you are long or looking to stay long, first point it should test is really 1.59522. Okay. Okay, no, nothing really coming through on the wires now after the Bank of England. So yeah, not a non-event, but really kind of, nothing conclusive coming through right now from the Bank of England. So, really, again, we're testing that first pivot, 1.59458 on the pound against the dollar. So, again, what do you think is going to happen? Are we going to start to find support on the moving average, and we're going to bounce up? Interesting to see, guys. It's not really kind of taking a strong bid. It's trying to now. Okay, so we know the target with the second pivot. So if you're looking for a short-term scalp, that's probably where you get out your position. If you're looking for a longer term, then you're looking for this to break aggressively, act as support, and your resistance would be 1.59747 after that. So again, it just depends, doesn't it? Okay, so JP is saying, what is the pit value you normally take? Well, I trade anything between, 1 to 50 lots, really. It just depends on the opportunity and what I'm trying to achieve. For my advice, really, is to start off with a 1 lot. Start with a 1 lot and then build into a position. If you do that, you've got room to maneuver. If you start with a 2, 3, 4, 5 lot, then every time you increase your trade, it's going to get much more exponentially expensive. So start off as small as you can. So a little bit of a bid coming back into the FTSE. So again, we can see no resistance at 6383.0. So nothing really kind of from that meeting, I'm afraid. Nothing kind of out of the ordinary. What do you think, guys? What do you think for the interest rates? What's that mean for people that live in the UK? Is it good the rates are remaining low? Is it all about servicing debt, or do we have to tackle inflation? What do you guys think? Any thoughts from our regulars? Any thoughts from Chris or any of the guys? Anybody else? What do we think? In the long term is going to happen? Are we going to remain with these low rates until 2016, the Fed are saying, are we going to follow the Fed all the way down that route? How high can we allow inflation to go before we do something about it? What do we think? Any thoughts, any questions? So again, we've seen 1, 2, 3, 4, 5, strong, candles, in the FTSE now. So again, generally 5 or 6 green candles before we see some reversal. Again, the market's making it very difficult for people to hold long-term positions right now. That's why I say start off with smaller size, because they are generally going to overextend and push you, as far as they can. So, any thoughts on any other kind of questions or any kind of product you'd like to go through? What do you think, guys? Okay, Oliver's at Manjo's, right? Steve, how many instruments do you follow already in the finance? Sorry, at any given time. I'd say I probably follow 3, Manjo. So I'll probably look at 1 commodity, maybe gold, an indices and a currency, or 2 indices. That's generally what I'd look at. So no more than 3, really, to be honest. Oliver's saying long term, no change. Too much debt already in the finance system. Yeah, absolutely, Oliver. But again, we've recapitalised the banks, so it's individuals that we're trying to protect at the minute. So, there's more money sat on the balance sheets of companies than there ever has been. So, really, for me, it's all about getting that balance between, the companies and the banks giving the money back to the people in a responsible manner, and stimulating growth and prosperity that way. Just trying to tax corporations, isn't really the kind of way forward. It's it's all about encouraging spending and encouraging growth in a maintained and stable way. Okay, yeah, I got that Oliver the notes now. Sam's just saying, my thoughts, government will strike a balance between inflation and costs of UK goods to outside the world, and that to decide rates. Yeah, I mean, that's a very good point, Sam. Yeah, absolutely. I mean, you know, we're a global economy now, so it's not just about the UK. It's not just about internal policy. It's how we interact with the rest of the world. And I think, for me, though, the biggest telling point will not be unemployment. It will not be, you know, what the Fed do. It will not be any external influence. There'll be people in the UK just saying, whoa, you know, enough's enough. I'm not paying this much for petrol. I'm not paying this much for a bag of shopping. You know, it's 2013. We're a developed nation. We get taxed, you know, fairly highly. So what's going to be done about this? You know, I'm not going to live like this anymore. And that'll be the breaking point. You know, people just simply not being able to live, you know, a sustainable and comfortable life. You know, this is England we're talking about. You know, we're not a third world country. Okay, Sam's also saying, I guess they'll tag along with the other nations, the world increasingly gradually along with the others, but not too far from them. Yeah, well, exactly. I mean, nobody knows what they're doing, do they? I mean, the whole point with the US is it's not broke, so don't try and fix it. Debt ceiling's been raised 78 times. You know, why will we not raise the debt ceiling this time? Why will we risk defaulting, you know, denting our reputation in the world stages by not doing what we know has worked? And let's face it, you know, the US have been aggressive and they've kept rates low and they've constantly, you know, whenever there's any kind of wavering, you know, they said we're not going to cut quantitative easing. So realistically, you know, what's there to be done? I mean, you know, the markets have shown and tipped their hand that if it does get bad, then we're not going to stop quantitative easing. So the Fed have really kind of made a rod for their own back, so they can't not raise the debt ceiling. They just can't. They have no other option. They have to raise it, and that's what has to be done. So crazy or not, how about something extreme like send men to Mars? New economy adventure sounds fun. Well, when we tried it in the UK, didn't we, with a high-speed rail link between Birmingham and London, that got completely thrown out. Yeah, let's send people to Mars on a one-way mission. I can think of quite a few people I'd stick on that. Yeah, if it was down to me in the selection committee, there'd be a load of people I'd send on a one-way trip to Mars. Yeah, good riddance. Justin Bieber, he'd be one of them. But, you know, in all seriousness, you know, big government projects to stimulate growth, yeah, fine. But unfortunately, you know, with debt ceilings and debt, you know, limits so high, you know, we can't really, you know, commit to these huge, you know, infrastructure changes. And if we're going to do a huge infrastructure changes, you know, do an overhaul to the rail system. You know, why just make, you know, it easier for people to get from Birmingham to London? You know, all this connecting the north and the south. If you want to get down to London, jump on a plane. How hard is that? Why do you need a fast, expensive, you know, old technology train? You know, why do you want it? I don't understand the argument for it. I understand connecting the north and the south. You know, that's a good thing. But, you know, why do you need a high-speed rail link to do that? You know, there's so many airports that you can get to easily now. I just don't understand the logic behind it, to me. So, it's not going to get through anyway. It's not going to happen. You know, just don't have the money. You know, that's a simple fact of the matter. The Treasury does not have enough money to be able to do this. So that's that, really. So what's my take on the US dollar, Sharon? Well, my take on the US dollar is it's still the world's major currency. So everything's priced in dollars and it's not going to go away, is it? You know, the US prints the dollars, but the rest of the world holds the dollars. You know, China and Japan have more dollars than the US put together. So you have to really think that the dollar's going to continue to grind up. After this, debacle in the US is taken care of, then yes, I think that the dollar's going to re-strengthen. Right now, let's look at the euro versus the dollar. That's generally the broadest one for me to look at. So let's just get the euro dollar up. So the euro dollar. So again, we see the euro strengthening and the dollar. So that means the dollar's weakening. But let's look on the kind of higher time frames. So higher time frames, really the dailies. Okay, we're certainly trending upwards in the euro. But, you know, again, if you look at the weeklies, the higher time frames, you know, we've still got a long way to go to retest these previous highs way back here. So for me, I think the euro is going to kind of peter out about 1.37. It wants to get down to 1.3, doesn't it? I mean, that's where it's comfortable. That's where, you know, people find, parity. So that's what I'm expecting, really. Kind of the market's going to peak up about 1.37. The dollar to strengthen. So again, you know, the euro will come down, get down to maybe, the 1.3. You know, really down here, back to moving average, I guess, on the dailies. That's where I'd, be looking for this to kind of really get out. Pat on fire, do you think the Aussie has bottomed? Well, I mean, everyone keeps saying this, don't they? Everyone, keeps looking for the Aussie. It's in the news quite a lot. Again, if you look on the kind of weekly view, then yeah, I mean, it's looking like it could have reached the bottom of very, very good, strong support here at 0.88913. Yeah, so very kind of good support here. So I guess, very good rigid resistance. So you'd be looking for a 50% mark retracement to tell you one way or the other. Well, we've not reached as high as that yet. So really, if it has bottomed, it's going to have to test another 232 ticks to get to the 50% round about here, okay, at 0.97004. And if we're bullish, we've got to get back to these highs, then yeah, we've got another, 900 ticks to go. Once we start closing above that, the upward momentum will continue. But again, if we dip and we start to break below that 50% in the coming days, weeks, and then we're going to start hitting these lows once again. So for me, yeah, we're kind of look out for these Fibonacci levels here. The 38.2 and the 50%. We've still got some upward movement. With another few hundred ticks to go. But if we don't continue that, the market's certainly going to come down and get back to 0.8913. So short term, yeah. I mean, again, you can make any argument in any market, but yeah, short term, then it looks like that's a fairly good buy, to be honest. Has it bottomed? Well, yeah, certainly for now it's bottomed, hasn't it? Because we've got that very big, strong weekly support down here, and the market has moved up. So, yeah, I'd say for now, it has bottomed. A long way to go on the upside, and another 200 ticks to kind of reiterate and prove that, I guess. Okay, guys, anything else? Anything else we'd like to kind of to talk about, or anything we want to go through? Any of the products? Okay, Trish just saying, how about the New Zealand versus US dollar? Okay. New Zealand dollar versus the US dollar. Well, we seem to be ranging right now. Again, we're looking on the weekly chart. So we've hit, a good level of resistance at 0.84349. So we're kind of just trending downwards. We're inside the Bollinger Band. So really, on the weekly charts, if that is the high, okay, again, consecutive lower highs been made, then we're looking for, this kind of region down here to be hit. Down about 0.81655. So that's where we'll be looking to, to kind of trade down to, I guess, down here. We look on the more kind of smaller time frames with dailies. Then in quite tight range, really. Again, you can see all these wicks here, and the market's tried, to close lower now. So looking more bearish for me than bullish. So we're looking for all these wicks, not to be kind of retested in these highs up here, not to be tested. So really, the first point to tell me if the market's going to continue downwards, if we start testing 0.81623, that really for me is, going to be a key pivot, because if we start breaking below that, the market's going to hit low. So again, do yourself a simple Fibonacci, something nice to kind of hold on to. Again, surprise, surprise, we're bouncing off the 23.6, the 50% you target. Okay, so these levels are coming to play. So for me, if we're going to continue downwards, then, the New Zealand dollar's going to have to have the US dollar, another 200 points, 188 ticks downwards to the 50%. So if I was short, okay, my stop would be up here, but my target out point would be down here. So quite a long way to play with on the New Zealand dollar versus US dollar. Good 200 ticks to get short. Okay, Chris, good to see you again. We've had 2 inside days on the Kiwi over the last couple of days. Yeah, I mean, inside days, again, when you have inside days looking for a breakout. But these markets, what I tend to find is that everyone knows that. So they break and get everybody into that position. They go the opposite way and get everybody out and then do the break. So be careful on inside days. They're not really the kind of trick and trading kind of certainty that they used to be. That's what I'd say for that. Trish, you're long, but only up 7 pips. Well, yeah, okay, Trish. It doesn't look too bad if you are long, because you are finding support on the 23.6. Depends how long you want to hold the trade for. Again, if you're intraday or looking for a long-term position. Again, if you look at the DMARC on the daily, then yes, we're certainly, very, very low at the minute. Again, every time we pop out, we do tend to go back up. but the RSI is still fairly high, leading, that we've still got room to sell off before we see that reversal. So for me, doing that kind of judgment, that kind of analysis, I would say that we've got more room to test on the low side before we find a bounce. That's how I would interpret it. So short term, more risk on the downside. Longer term, more likely to be a bounce. But it depends again if you're a day trader, if you're an intraday trader, or you're holding this, for a long term position. Again, if you look on the hourlies, then yeah, we've seen a nice bounce. So 1, 2, 3, 4 green candles. And if you look on the hourlies, okay, the down move probably started here to here. So yeah, we haven't reached the 50% here. But I would say you're only going to get to the 50% in green candles before the market retests down and then goes up. So as I say, you've probably got more room to short than you have to go long. So for me, you've got another 59 ticks to go up. Realistically, probably 150 ticks to go down from that point. So it just depends. If you want to stay short term in that trade, that's fine. Again, it depends where you're long from. You're only 7 ticks in profit. Then I think for me, right now, you might be catching the end of the move. But yeah, what do I know? Again, I'm just telling you that, it depends how long you want to stay long in that trade and what you're looking to achieve. What's your profit target, Trish? What you're looking to get out of this? Is it, a 20 tick move, 50 tick move? Okay, Sharon is selling the US dollar until they sort themselves out. Yeah, again, that's great. That's the fundamental view kicking in, Sharon, isn't it? That until these Americans pull themselves together, then it's bad news. So the dollar will weaken. But unfortunately, inevitably, what everyone's waiting for is that comment that yes, Congress have met and it's all over. We've raised the debt ceiling for the 79th time. Everything's happy now. Stock markets go up and rally. I think that's what everybody realistically is looking to happen. But the longer it goes on, the more it's priced in. The less the world, stops falling apart when the US is shut down. It's not going to continue forever, is it? History tells us that. So it will get sorted out. It's just when and the ramifications. It's costing, billions of pounds, billions of dollars a day to keep the US closed. It's not doing anyone any favours. So for me, it's going to, it needs to be done by the 15th, 17th, I thought was, what somebody else told me. But regardless, it makes absolutely no difference. It needs to be sorted out. The longer it goes on, the worse it is for the global kind of markets. Okay, guys, anything else we'd like to ask? Again, we're focusing on the Bank of England today. It hasn't really done anything, has it, unfortunately? These events are notoriously stable, but again, it's worth covering them because, the markets do kind of move and dip around, while people price at what could be said. Okay, so Sharon's saying China 1.8 trillion and Japan 1.4 trillion need to sort themselves. Yeah, absolutely. Again, the numbers are just so huge. When you talk about the dollars and what people have in reserves, what countries have in reserves, it's huge. It can't, when you get people like Japan coming over the wires and saying things publicly and, things are bad because, they've all been on the phone to Obama, all of them. Well, listen, Obama, we own your country. What are you playing at? Sort this out. There's no punches being pulled here. It's not. It certainly isn't good. Okay. Will the pound make some new tops? Well, we've just talked about the pound. The pound here. We've got our targets. It's kind of struggling to make these tops up here, but yeah. It looks that we've got a good strong line of support down here, above 1.59. So yeah, you're looking to get back, to some fair value. So again, use your Fibonacci. That's where it's gone to. Your target is 160,221. Simple as that. I can't really make that a lot clearer. Okay. What do you think about the Swiss? More strong because the dollar is weak now? Yeah, John, absolutely. The Swiss is still, a relatively well-proven safe haven. But again, I think everyone's waiting for, everything to be sorted and the dollar will spring back. So I wouldn't be too bullish the Swiss right now myself personally. Okay, Sharon saying, what close do you prefer, the GMT or the New York? Well, I try and stay away from the opens, to be honest. I let the market do what it needs to do in the first hour. I let the open in the US do what it needs to do in the first hour. And then I kind of get involved. I prefer trading a little bit later on, when the US has pulled itself together and everything's in full flow, because you get a little bit more true moves. I'm finding that I'm getting the overall direction of the market right, but a lot of squeezes in the GMT sessions. And it's quite hard to hold something all day when you kind of, always seem to be catching pianos or trying to stop a speeding train. So generally the afternoons are a little bit more, after kind of 3 o'clock, a little bit better. Any kind of data you've got's been absorbed into the market, and you get a little bit more of kind of an accurate move. And I'm always trying to get involved in the extremes of the market anyway. So, the very, very tops and very, very bottoms. So, when I do kind of get squeezed out of positions, it's because of, spikes and volatility. But, again, I use the RSI, the DMARC indicator, the Bollinger Band, and see where we're trading. So again, interesting to kind of see, I'm expecting a little bit of a sell-off from these highs in the stocks. Again, you see the Nasdaq for me, it'll go from 0 to 300, 400 points plus, and then back to negative, negative 200 points back to plus. So that, for me, when that as stops moving in one direction, that's an indication that, the other market's going to stop. A lot of green candles in the stocks right now. So you generally see 5, 6 green candles and then some sort of red to reverse. And then if the momentum carries on from that point, then we have to really wait and see. But nothing goes up forever, nothing goes down forever. If you're picking your point, we can all generally be right in directions of stocks and directions of any market. But that's not the art of trading. The art of trading is making some money out of that. We can all sell something that's going down and lose money. We can all buy something, that's going up and lose money also. So it's where you position yourself and how you get in. So interesting, isn't it? So let's go back to the main kind of markets and just see what's happening in the world. So again, gold, is again, is looking to get back inside. We trade more than 50% of that bar right now. I still think there's quite a big way to drop in gold. I'm not expecting gold to get down here, really. Just, because it's rejected all these highs so many times and sold off. So, I do expect gold to kind of drop off. Again, we've seen this top here where I'm short, 864610 in the 100% in the DAX. So again, we're seeing that red candle now in the S&P. So really, 8621 in the DAX, we're looking to test and maybe just come back into the range somewhat of the S&P. But again, stocks remain very, very strong, today for some reason. Maybe, it's all priced in that the US will sort themselves out and it's time to get on with life. But, very hard to trade these kind of stuff technically. You think 1, 2, 3, 4 green candles in the DAX, wick, rejected the ultimate high. So this market should be trading down here now. We should have all the sellers in, but, they're just not doing it. The bear reversal's right on a mid-trend, so we've still got down room, at 66.51 in the overbought territory, so plenty of room to come back down, but they just remain very, very strong, the stocks right now, don't they? So is there more correction in the pound left? Well, again, we've talked about the pound, but, I still think there's more upside room in it, yes. But, again, it depends what you think is achievable, what you think, the market can potentially do. For me, I think, yes, the pound's a good, solid place. And I think for me, longer term is, out of the G8, out of the G20, I think that the UK are going to be first to move on interest rates. So, I think, the pound's only going to continue to get stronger. My stance on the euro. Everyone keeps saying that the euro's out of crisis. It's sorted itself out. I can't see that. How's that happening? The unemployment rates are still huge. Greece has, still more debt than when the crisis started. So, where's all this good news coming from at the eurozone? I don't know where it is. So for me, it's remained strong, bullish the dollar, negative the euro, and the pound again, I think, is going to sort itself out and be the currency, for the next kind of 10 years. So, yes, that's my kind of views, guys. Alright, guys, well, that's pretty much time for the session today, I guess. Any final questions? Anything else you want to ask? The best way to interact with me and talk to me, guys, is, at Steve Ruffley on Twitter. Do ask me any questions. Anything, again, when you're trading, just give me a tweet. What do you think of this? I'll always help you out, send you a chart. I'm good like that. Anything else you want to know, again, please just let me know. Okay, guys, well, nothing I can bring to the table now. I'm expecting a correction in the S&P and DAX at some point. I think we've reached the top right now. Might have to be patient for that, though. Waiting, really, on the fundamental side for the US to sort themselves out. And once they do, that's a license just to buy back into the S&P, because we've still got, the backup of the quantitative easing, so it's still free money at the time being. Yes, sorry, Chris, no beer money today. No trading opportunity, but what can we do? We can't make money all the time. All right, guys. Well, listen, thanks for attending. Been a pleasure as always. Thanks to Maud and Vicky and the guys at FX Street. And, tune in for my next seminars. And thanks, guys. I'll see you all very soon. Good afternoon.